Well, hello, everyone. Thank you so much for joining us again for Safe Money Radio. If you're listening right now, you're missing out on something special because there are two beautiful faces on the screen for those who are going to see this on YouTube. So if you're listening to Safe Money Radio for the first time, it is also a podcast, and this is the most special podcast and show we've ever done, and I'll tell you why. Those of you watching right now already know. You can see that I have a guest on today's show, and it is my good friend that I've been talking about for 15 years now. America's IRA expert, Ed Slott, is not only on the show with us.
That's right.
He's right here in our studio in Springfield, Missouri.
And it's you gave me a little tour of the town here. It's unbelievable, the stuff I've seen already here.
He got to see a little part of Wonders of Wildlife. He didn't go through it, but he got to see the real Bass Pro. I told him, when people say, yeah, I've been to Bass Pro, not if you haven't been to Springfield, Missouri. So
150,000 square feet of it.
That's right. And last night you got to eat at the restaurant inside.
Hemingway's, yeah.
Yeah, so it's
beautiful.
Good stuff. So, and there's a reason why today's very special. Ed's not only going to be on this radio show and on our podcast, but tonight we have a major event in Springfield. It's going to be at the White River Convention Center, and there's about 150 of you lucky people who paid attention over the last month and signed up. You're going to get to hear Ed live tonight. Now, I know that there's 50 people on a waiting list, but we will be doing this event again, so just pay attention in the future. We definitely will have Ed back to Springfield. So, Ed, are you excited to be here?
Oh, I can't wait to get over there. I saw the venue earlier this morning. I can't believe the place.
It's pretty incredible. So, well, friends, if you're listening right now, just know you can always go online. Just go to YouTube and just type in Brad Pistole, Ed Slott. It'll pull this video up. And we've done about 5 videos together now. So there's lots of videos over the years that we've done together. But if you ever want to call in, you want to get a copy of Ed's book, just call in anytime, 866-780-7233. That's 866-780-SAFE, where we do talk about all kinds of safe aspects of financial planning. How you can, I'm not going to take your tagline, how you can keep more and save more. What do you say about that?
Have more, keep more, and make it last. That is so important. You know, I just saw something, and I may have this wrong. I just read something about one of Vanguard's investing strategies, because it was in context of people, and I'll talk about it a little later, that have lost a lot of money in their company 401ks.
Right.
And they said they have 3 pillars in this order of importance: safety of principal, liquidity, and then income.
Yeah.
And to me, that's critical. And that was in context of an article that just came out, depending on when you're hearing this, it just came out a couple of days ago. Actually, I think it was in yesterday's paper. So if I date it, that might be September 11th. Today's the 12th. Yeah. There was a story in the New York Times, I don't know if you saw it, about the bankruptcy of Bed Bath & Beyond.
Right, yes.
And a lot of those people, even though they were told their 401ks were protected under ERISA, they're not protected under investment type losses. Wow. And a lot of them in the bankruptcy, these are people that worked, believed in the company, and they didn't have the safety.
Yeah. It's a big, big deal. And that's what we're talking about on this show all the time. And we have the best and the most knowledgeable person on planet Earth, in my opinion, here to talk about it. So stay with us today. Just remember, you can always call in 866-780-7233. Just ask for a copy of Ed's book, The New Retirement Savings Time Bomb. We might even share some exciting news about that, about what's coming up with this book here in the future. But you can always call in and get our information anytime, 866-780-7233. And there's always someone standing by to take your call. So, friends, those of you who are with us today know that we have our good friend Ed Slott here with us today in studio in Springfield, Missouri. And Ed, I want to jump right into something. I actually printed out some stuff that I've got here.
Before you jump into that, I'm in Springfield. Yeah. Where are we going to lunch?
Lambert's.
All right.
Lambert's, the most famous place. That's right. He was like, what's that place? This is the home of where they throw the food at you, the home of the throat roll. Everyone wants to go there. So, so it's going to be exciting stuff today. But this caught me off guard. You know, I'm thinking about Ed's coming to town on September 12th. I want to talk to him about all these things. But then being in your group, I'm always following you and where you're speaking. And I got this little email from you guys about how there was going to be this webinar. And I thought, boy, it's a perfect time slot. I'm going to jump in there and listen to it. And those of you listening or watching right now, I want to tell you this. This webinar was from last week.
Oh, yeah, right.
Okay.
Financial Advisor magazine, right.
For Financial Advisor magazine, there were 2,500 advisors listening into this call with Ed speaking, and this blew my mind. You had my good friends, our technical consultants, Andy and Sarah, on there, and they're trying to answer everyone's questions. There were 536 questions asked to you in less than an hour
right.
while you're speaking. And so I typed Andy and Sarah, and it's like, hey, I cannot keep up with the questions and the answers and listen to Ed. Is there a way for me to print all this stuff? Because I want to study all of it. So Ed, here's what I want to ask you. It's 2,500 advisors, 536 questions. How hard is it even for advisors to keep up with all the information?
No, the rules are changing. You should see some of the questions from financial advisors, people managing your money saying, wait, I thought that was the rule. And I'm thinking, holy moly, they have clients that are betting their life savings on them being up to date on the latest information. I don't know if you caught at the end. I saw your name up there.
Yeah.
Did you catch that?
Yes.
I mentioned you. There were actually over 4,000 registered, 2,500 got on. But you're right. They were pummeling us with questions. Now, as you know, our team answers, they were answering, Sarah and Andy were answering questions on the chat and the Q&A, typing in the answers. Yeah. So you might say, how could they type in answers so quick? Because they know what they're talking about. Remember, this is all they do. That's what having expertise in an area, which, it always gets me. People say, well, that's a niche area. Niche area, yeah, it might be a niche area, but it affects everyone who ever saved for retirement. That could be 100 million people. I think it's a big niche.
It is. And every single week, there's not a week that goes by where something doesn't pop up in our office. And I'm like, up there, that's a question for Ed and Andy and Sarah and Ian. And so I actually printed, those of you that are watching right now.
Oh, yeah.
I printed pages and pages and pages of these questions. And it's interesting what you were saying. How did they type in the answer so fast? Well, here's a trust question. Is it better to have a trust listed as an individual for an IRA beneficiary? What are the rules? And he'd go into all that. And I love it. They wrote back and said, unless there's a legitimate reason to name a trust as an IRA beneficiary, like special needs and spendthrift, don't name a trust. But then after that, it says there's not enough space here to outline all the reasons for this. And just yesterday, Ed, we had a very prominent client of ours who lets us say he's a state representative. He called us about his trust and whether or not he should name the trust as a beneficiary, wanted us to talk to his attorney. And here's that question that we covered right there last week. And this stuff is tough for advisors.
It is tough because they're changing the laws. There was a time, and I don't want to sound like an old fogey, but I am. There was a time when a tax law was enacted. It was a big deal. And everything became effective on the date of the president's signature, on the date of enactment. Now we have not only tax laws coming at us every couple of months, it seems like, but like you take Secure 2.0. I always have to laugh at the name of the act. Yeah. As I always tell you, whenever Congress and I've learned this over 40 years of studying tax law, whenever Congress names a tax law, you can almost always bet that whatever they name it, it will do exactly the opposite. Right. How about that Deficit Reduction Act? How's that working out? So when I saw Secure and then Secure 2.0, I said to myself, hold on to your wallets. And sure enough, and it was so complicated and they just throw these things together. Secure 2.0 was signed into law on December 29th. 2022, effective 2 days later. How's anybody going to know? So, of course, as you heard on the program yesterday, there were a lot of details that were ambiguous. Some things were even wrong. For example, when they ran home for vacation, or as soon as they did the law, they inadvertently cut out the ability to do catch-up contributions. They deleted it from the code, trying to put something else in there and say, oh, bye, got to go, Christmas, Yeah. And now IRS has to deal with it. So that was protected. did. But effectively, under Secure 2.0, you weren't even allowed those age 50 or over, and that's a big deal. Put more money in, but that was fixed. But there's a lot of other things that are not fixed. And what we do in Ed Slott's Elite IRA Advisor Group, which Brad's been a member of over 15 years, something like that, they take the tax training. Now, I just want to be clear. I say this on every program. What we do as an educational company, a tax plan, we teach tax planning, and I think that's the critical part of a retirement account. It's what you keep after taxes. You can't spend what goes to Uncle Sam. And if all you're doing is building and building and building, all you're doing in the end is building a savings account for Uncle Sam. And as you know, he's not even your real uncle. So there's no obligation there. So what we did, and Brad started with this group when he realized, the only way to protect my clients so they can keep their money, yes, I can help them invest and protect it, but what about protecting it from taxes? And that's what you've been doing for your clients. So people say, well, you have this group, Ed Slott's Elite IRA Advisor Group. What do you teach them about investments? No, I don't do anything with investments. Our team doesn't. We do it on what I think pays off even more than investments, good tax planning.
That's right. It's about, so many people are focused on how to get the money into the account and what it's invested in, but it's about how to get the money back out of the account. Keep as much of it as you can in your own pocket and pass on as much as you can to your real family members, not Uncle Sam, who's not a family member, who may inherit 50%. So if you're listening right now, you may be one of the people that's, I have callers all the time that say, Brad, I've been listening to you for 13, 14 years because we've been on 15 years now. And they will say sometimes, why are you always talking about Ed Slott? You talk about him all the time. Well, you're learning right now. How quickly he knows the answers to all these things that I can't possibly know all those
well,
answers
let me, this is a specialized area. The definition of an expert?
What's that?
Somebody who knows more and more about less and less until he knows everything about nothing. That's me.
That's good. That's good. Well, if you want to talk to one of those experts and find out what you need to be doing for your retirement accounts, we have the sources right here. So call us, 866-780-SAFE. 866-780-7233. If you want a copy of my book, Bulletproof, the Safe and Secure Retirement Income Plan that Ed wrote the foreword to, just call us. We'll give you a copy absolutely free. If you want a copy of Ed's book, we will give you a copy absolutely free. So just call us at 866-780-7233 and stay with us because we're going to jump right back into some of these questions that you need the answers to. So, Ed, before the break, we were talking about this conference or this webinar that 2,500 advisors were on. They asked you 536 questions in 1 hour. And I thought, I'm going to pull just one of them out so our consumers, our listeners, can hear how complicated this is.
It is. And you said it before in the last segment. So if you're just tuning in, it's complicated for professional advisors, but here's the difference. Most of them, it's complicated anyway, and that's Congress's and IRS's fault, and that's just the way the laws work. They just keep putting Band-Aids on Band-Aids, and at some point they have to start some new system, especially when you have most people's retirements, most of the money people have are in their retirement accounts.
Right.
Why should it be so complicated to get your own money out? But it is. But most advisors don't have the specialized knowledge you need them to have when it comes to getting that out and keeping more of your hard-earned money. Why? Because most of them focus on what we call accumulation, helping you build and build. It's like a football game. Now, we're in Springfield, right?
Right.
This is close to Kansas City. Is this a big football town?
It's a pretty big
I'm just
football
saying.
town. Yeah.
Super Bowl.
Chiefs.
Yeah, right. So I always use the football analogy because people get that. Football has two halves, the first half and the second half. And there's an old saying in football, give me the score at halftime is irrelevant. Give me the score at the end of the game, and then I'll tell you who won.
Yeah.
It's the same thing with retirement. There are two halves, the first half and the second half. But most people are only told by their financial advisors to keep accumulating, building, saving, and working and investing. That's only the first half. But most people play that game. They go in at halftime. They say, look at it, we did it. We have all the money we'll ever need for retirement. They pat themselves on the back, go in at halftime. Meanwhile, The IRS is coming out. They're playing the third and fourth quarter. They're playing nobody, so they win. That's because most advisors aren't trained in the second half of the game, the tax planning. This is all about tax. Remember, your IRAs, 401ks are tax deferred. It's the low hanging fruit for IRS, for Congress. This money has not yet been taxed. That's why I created Ed Slott's Elite IRA Advisor Group, which Brad has been a member for over 15 years, just training on the tax planning so you can keep more of your hard-earned money. I want you to have more, keep more, and make it last. You want your plan, not the government plan. And in case I say that in every seminar, you want your plan, not the government plan. And people say, Ed, what is the government plan? You really want to know? That's easy. Do absolutely nothing and let it all happen to you.
Yeah. That will be a very painful experience for your family, for yourself and your family. And I just thought of something while you were saying all that. I think we'll talk about it in the next segment because it's perfect. We're going to talk about overtime because it's not just what happens at the end of the game. As we learned last night in an overtime game last night, sometimes it's what happens after you're gone that determines everything. In the overtime period, that's going to dictate what's going to happen to your family. So
that's true.
Let me ask you a question. This will just show people how confusing this is. You and I both have Roth IRAs.
Right.
Because we converted many years ago. I did because of you telling your story at an event that I was at in 2010. We're like, get rid of the tax. So I did. When you have a Roth IRA, is there a required minimum distribution for the owner of the Roth IRA?
No.
No, because you've paid the tax. Now watch how interesting it gets. Is there a required minimum distribution for the heir of a Roth IRA?
There is at the end of the 10th year after death. But where the confusion comes in, IRS and Congress made this so confusing. For most of your beneficiaries now, there's no more of what we used to call the stretch IRA, where the beneficiaries, your children or even grandchildren, used to be able to go out and extend distributions, deferring the tax for 20, 30, 50, 70 years if you had a young grandchild. Right. That's all been gone since 2020 when the original Secure Act became effective, and it was replaced with a 10-year rule. Some reason Congress has been telling people, oh, you better save for retirement. Then you save. They say, oh, now we got you.
Yeah, that's right. That's right.
You fell into our trap. And now they say they don't like this whole deferral. Why don't they like it? Because they have to wait too long for their money. And as you know, our country is broke thanks to Congress and all the plans they made. So they blame it on all the people who did everything right. I always say our tax system is a penalty on savers. It shouldn't be, but it is. So they replaced it with a 10-year rule saying, we want the tax. I'm saying Congress is saying this because that's what they put in the law, the original Secure Act. All that money out at the end of the 10th year after death. But then IRS came in and say, but wait a minute, when Congress wrote the law, they left another piece into it that most people aren't aware of. And for some beneficiaries, they will have to actually take RMDs, required minimum distributions, for years 1 through 9 of that 10-year period, but not so if you leave them a Roth IRA. So this may be something where another incentive to convert to a Roth IRA, because your beneficiaries now, even under these new rules, can still hold that inherited Roth IRA for the full 10 years, growing, building, compounding income tax-free, and take it all out with all that tax-free accumulation at the end of 10 years after your death. So it's a pretty nice gift to do for your children and grandchildren.
And if you just listen to all that and your brain went, poof, and you're like, wait a second, whoa, let's way back up. That happens to financial professionals too. That's why in every room, and Ed's been here today in Springfield, he sees all of his stuff and all throughout all the offices. I have all of his charts, his graphs. I have the 5-year conversion rules for the Roth IRA. It's the Bible for the Roth conversion. There's just all these rules that you have to keep up with. And that's why I've been a part of Ed Slott's Master Elite IRA Advisor Group since 2010. And will continue to do it as long as I'm here. I'm going to be learning with the best of the best. So if you want to work with someone who stays on top of these rules, who knows how to protect and keep your money safe, who understands it's not what you make, it's what you keep that counts, then you're listening to the right program. We are the longest running financial planning show in the Ozarks. Just call us anytime, 24 hours a day, 866-780-SAFE. That's 866-780-7233. And there's someone standing by right now to take your call. So, Ed, I want to ask you, we're sitting here in Springfield, Missouri. You're here for the first time ever,
yeah,
right?
it's fantastic. Everything I've seen so far.
So, and he's going to see a whole lot more today. He's going to learn about all these wonders of wildlife, all these things that are going on in the Ozarks. But I want to ask you this. We're in the fall of 2023. We're about to be, right? And we have an election year coming up, which is always interesting. And we have people on trial for all kinds of things. And all this crazy stuff's going on. And Congress's Secure Act and Secure Act 2.0. What are some, in your opinion, some of the major things that retirees are facing today in the world that we live in with what's going on?
Well, they face uncertainty about their retirement money. Remember, like I said before, in the first half of the game, they spent 30, 40 years working, building, sacrificing, doing without so they could have something now. Now they're worried about protecting. They've done everything they were supposed to do. And now many of them have retirement savings that I believe is at high risk, and they know it too. The big risk comes, I hate to say it on a show, from a four-letter word. The biggest threat to your retirement savings is a four-letter word. Nope, it's not kids. Everybody knows that's a horrible investment. Where's the payoff on that?
Never going to pay off.
Nope, the four-letter word is math. M-A-T-H. As an accounting person, a CPA, I look at math. I look at the numbers. Look at our deficit and debt levels. The whole country is running on a credit card. At some point, that bill is going to come due. Whoever's in office, it doesn't matter. It's math. The country's going to run out of money. And who are they going to go after? The sorry people who have most of their money, I called it before, the low-hanging fruit, most of their money in retirement accounts that have not yet been taxed. Tax-deferred, IRAs, 401ks. That is the low-hanging fruit for Congress, whatever party they're from. They are looking at your retirement savings as a big, juicy steak. That's why you have to do something about it now. And that's some of the things we're going to cover at the program tonight. Alternatives. You have to change direction. You ever go, every city has it. In fact, I was talking to one of our advisors from Alaska, of all places. And he was telling me they only have two seasons in Alaska, winter and construction. Now, when you have construction, everybody knows about, at least in my area, the orange cones.
You're right.
You try and get anywhere. What do they see? The big sign you see? Detour. You got to go down this street, up that way, down this high, around the world, and finally you get. Well, it's the same thing here. I'm looking at, you may have to make a detour in the plan you created. There's a lot of orange cones out there now, and I'm worried about the security, about the taxes going up. We're now in the lowest tax rates you may ever see in retirement. Now is the time to act and look for alternative solution, alternative routes. Get off the road. Get on a detour that takes you to what I call the promised land, where you can keep more of your hard-earned money in tax-free vehicles.
You know, it's unfortunate. Everyone gets told when they're young, they get out of school. We were talking about going to college, and you get out of school and you get the job, and then you don't know anything about money or saving. And they say, hey, we've got this great thing. It's called a 401k. You need to sign up and we're going to give you free money. And so you do, but you don't know any of the rules. You don't know these things about, I can't touch that till I'm 59 and a half unless I take a loan, and then I have to pay it back or it's taxable. All this crazy stuff, the 70 and a half, 72, 73, now age 75 RMD rules. We've got all these rules that are hanging around out there, and you can't keep up with it. You have to rely on someone that knows what they're doing. That's why we don't try to be a doctor to ourselves. We don't work on our own teeth. We go to a dentist because we have to go to a specialist who knows that stuff inside and out. And that's why I rely on Ed Slott and his team, and have and always will, because they know the answers to this stuff inside and out. But if you're listening and you have a 401k or an IRA or a TSP or a 457 plan or a 403b, those are all tax-deferred accounts, and that means Uncle Sam is a partner in that retirement relationship.
I might say it a different way. Would you feel good if I told you you have a joint account with Uncle Sam?
Ooh. Yeah.
That's
'Cause
what it is.
you do. And he gets to set the stage as to how much of a partner he is in your plan. What we mean is when you take that distribution out, he says, here's how much you owe me. I was a bigger partner than you thought I was. And the state says, and I'm a partner too, give me part of it depending on the state you live in. So in our next segment, I'm going to ask Ed a personal question that I've heard him talk about before. You're going to want to know the answer. So stay with us because we're talking about these key retirement planning things. Call us anytime at 866-780-SAFE. That's 866-780-7233. Just ask for a free financial consultation. We do not charge fees to meet with you. I'll give you a copy of Ed's book and my book absolutely free. 866-780-7233. Now, Ed, I've heard you talk about this before, but on the thing that we did for Financial Advisor, where you were talking this last week, I heard you tell people the answer to a very personal question.
Oh,
How much money is in your personal IRA? Make sure everyone's listening because I know they want to know.
all right. Yeah. People sometimes, I don't usually like to give out personal financial information, but I will tell you, since I'm with Brad here in Springfield, guess how much money I have in my IRA?
How much?
Zero. Zero.
And why is that?
Because I love tax-free. It's a trap, 401ks, IRAs. And I got out of that trap back in 2010. And I was on every program everywhere. And I said, get out of the IRA. Remember, before 2010, you couldn't convert your IRA to a Roth if your income exceeded 100,000.
Right.
Well, Congress, as usual, needed money.
Yeah.
And they said, you know what? Let's forget that rule. Maybe we do want money from people to fill our coffers. And they got rid of that rule. And that year, I begged, I pleaded with everyone, take that deal. It was the deal of the century. And here's another question you don't know that I throw out to financial advisors. I said, I took that deal. And I throw out to financial advisors, I said, can anybody guess? I converted everything. How much tax did I pay on my Roth conversion in 2010? And I see the advisor say, well, you didn't tell us what bracket is. Zero. And they're all looking. How could this be? That was the deal. It was the deal of the century. I told people to take it. I did it myself. I follow my own advice. If you remember, you might be saying, how did I miss that?
Yeah.
I converted everything then because government was so desperate for money that they say, if you convert, no matter how much.
Yeah.
In 2010, no tax in 2010.
2 years.
You pay half in 11 and half in 12. In other words, the government gave everyone, like me, an interest-free loan to build a tax-free savings account.
Yeah.
And I took that deal and I begged everybody to take that deal. But some people didn't. They didn't see the long-term big picture. They said, but I don't want to pay tax even 3 years down. But look where you'll end up. You got to see the big picture. So it turned out, now I didn't know this, I'm not an investment guy, but I didn't know we'd have the biggest bull market from 2010 till now.
Right.
But all of my gains, all of those years are now tax-free in my Roth. And the opportunity is still here. And some people actually say, I had a client years ago tell me, I told him, take that deal. He said, but I don't want to pay the tax. And he said, but I'll be in a lower bracket in retirement. I said, that's not the case. Everybody thinks that because if you let your IRA grow, your RMDs, your required minimum distributions may be higher. So he came back and after retirement, and I was doing his first tax return for a full year of retirement. So he's there thinking, oh, now, and he looks at the return. He says, how could this be? My income is higher than my best years working. How could this happen? I said, easy, because you never listen to me.
Right. And people don't realize they build up all that money in their 401k and maybe they're married. So there's a second 401k and there's his social security and her social security. Right. And then they start all these distributions and find out, hey, there's taxes on social security income that they didn't realize was affected by distributions from tax deferred accounts, which is why we rely on Heather Schreiber to teach us all this stuff about social security. And then that's going to dictate what your Medicare premiums are.
Man.
All this stuff is involved. So I listened to Ed way back when. I converted to a Roth, and now I was telling him this morning my Roth is like quadruple what it was.
All tax-free.
All tax-free. And so it's why I'm always working with clients about the importance of not about what you put into the account, it's how you get the money back out of the account. So let's have a conversation about Roth conversions and about paying some taxes now, because when you retire, Uncle Sam's watching where you take every penny from. Where's it coming from? Oh, that was a taxable account. Well, let me get another extra tax over here on Medicare premium or on Social Security taxation because of all that. So this stuff is important. That's why he has $0 in his IRA. and same with me. I converted to Roths. So if you want to learn more about how to do this, just give us a call, 866-780-7233. A lot of this is covered in Ed's book, The New Retirement Savings Time Bomb. He's going to talk about things like this. I talk about it in my book on the radio program all the time. So if you're listening right now, know that you can also watch this interview as a podcast on YouTube. Just go to YouTube, type in Brad Pistole and Ed Slott. It'll pull this up. But you can call in for our free information anytime, 866-780-7233, and we'll be right back after this commercial for one last segment with Ed. So, Ed, when we were on this interview this last week, I heard you talking about converting from an IRA to a Roth, and you even told people, I mean, you were talking about personal stuff, nothing in your IRA. You converted to a Roth, and you even told them what you did with it. You said that you purchased some annuities and held them inside your Roth. Tell us, why did you do that?
It's funny. I get this question. You must get this question all the time on annuities. People say, why would you forget about the Roth. Right. Why would you put annuities in your IRA, tax-deferred, into tax-deferred? Don't you get that question all the time?
All the time.
Right.
All the time.
I do it because at some point you need guarantees. Bad things happen. You need guardrails. You need protection against downside risk. I'm a big believer of having a guaranteed income to rely on at a minimum for your basic monthly living expenses. But the only thing better to me than guaranteed income for life is guaranteed tax-free income for life. So I took those guarantees and said, wait a minute, I have my money for retirement in a Roth. I'll do it in a Roth. And if I'm hoping to leave that to my kids, hoping I'll never need it, but you never know. If I ever needed that money, I'll have guaranteed income, but because it's coming out of my Roth, tax-free guaranteed income. Now, it's not my whole Roth. I would never say do everything, put all your eggs in one basket,
right.
But it's to protect. I do have a stock portfolio in my Roth, and it's to protect against the downside risk. Like I said before, a buffer, a guardrail, a cushion, whatever you want to call it. You have to protect your money in retirement. Income is always more important than savings because savings can run out or be lost. And look at I mentioned earlier, the recent bankruptcies of companies that people have lost their life savings. You need some protection, at least at a minimum, my rule, to cover your basic monthly living expenses. You never want to be in a position, I can't pay the light bill. The market's down.
That's right. Friends, for those of you listening, you know that Hunter and I, my son and I, are both RICPs. That's Retirement Income Certified Professionals through the American College of Financial Services. And Ed was actually one of our instructors, one of our teachers through that program. And we specialize in, when people are like, why are you always talking about annuities and life insurance and tax-free and all? Because we want to make sure what Ed's talking about. Your basic living expenses are always going to be covered by something that's guaranteed. The only guarantees in this world, death and taxes we always hear, but annuities, and you have pensions, which are some of them failing. Very few people have them. And then we also have Social Security, which we hope will last, right? So the one thing we can control is taking an asset we have and putting it into an annuity, something that's going to be guaranteed to last the rest of our lives and cover the life of our spouse if we're married. So it's very, very important to make sure that we're doing this. And so, Ed,
when it comes to retirement, safety first. Save money.
That's it. So, in my book, Bulletproof, the Safe and Secure Retirement Income Plan, where we really focus on taxes, and I talk about my brain tumor, and Ed talks about why you need a specialist showing you how to remove those taxes. I talk about the triple whammy. The triple whammy is if you start taking distributions from an account while paying fees on that account, while the market's going backwards. That is a triple whammy, but there's actually a fourth one. I think in my next book, Ed, I'm going to talk about the quadruple whammy, so no one steal it. The fourth one would be if you're taking distributions while paying a fee, while the market's going backwards, while paying taxes on those distributions, that can wipe you out in retirement. So here at Safe Money Radio, and in what we do for our clients, we're teaching them how to keep their money safe, how to have the right proportion of risk and safety, making sure you have guaranteed lifetime income, and what Ed says, making sure you have tax-free guaranteed lifetime income. So if you're listening right now, if you've watched this show today and you want to know how to do that, just call us and ask for a free financial consultation. We do not charge fees to meet with clients. We will give you a copy of Ed's book. We've got all of Ed's books here, and we'll give you a copy of our book. But here's something we'll do. We'll have you take the RISA, the Retirement Income Style Awareness that was created by my good friend, Dr. Wade Pfau and Dr. Alex Marguia, and it will show us how to start to put together the right plan for you in your retirement income plan. Call us at 866-780-7233 and ask for our free information. And Ed, thank you so much for being here today. We're going to be talking to consumers tonight.
I can't
live.
wait. First of all, I love the whole area. What you showed me, I had the mini tour from Brad of Springfield. It's such a historic place and so many great things to see. And tonight we're going to get that message across. You want your plan, not the government plan. And you want to be in control of your tax rates. That's why I say you want your plan, not the government plan. You have a limited time to do that, but you can move your money. And this is something I'll probably say 10 times tonight, from accounts that are forever taxed to accounts that are never taxed. Tax-free is always better. Imagine opening up your Roth 401k statement and seeing, wow, all of that is mine. I keep 100% of it. I don't have to share it with anybody. That's where you want to be. That's how to make your money last as long as you and beyond. So I wish you a happy, safe, and secure retirement.
Friends, call us anytime, 866-780-7233. Remember, it's not what you make, it's what you keep that counts. Have a great day.